cover. And for more analysis on the market for Tuesday, I'm being joined by a senior investment analyst at Afrinvest, Robert Omotunde. Good morning, Robert. Thank you very much for having you on the program. So how would you describe what happened at the market yesterday? If you will recall, on Monday, we saw the all-share index nosedive so deeply, and then yesterday there seemed to be a reversal.
Well, what happened could just basically be attributed to investors taking profit. Remember that market was on a 10-day gaining streak, and we saw the market reported about 12.6% in 10 days, which was halted on Thursday. And of course on Friday, we saw that market took a hit, I think about significantly about 2.3% thereabout. The market lost on Friday, before we saw another major loss, on Monday. So Tuesday was a respite, that the market experienced, which we believe that it's expected, given that before we started seeing that reversal in trend, the market relative strength index had gone past 85. That's the index we see to know when the market is overbought. So what we saw yesterday, was a respite in the 2 day of consecutive losses that the market also experienced.
Now, when I spoke to an analyst after yesterday's trading, he said it was all about confidence, from investors outside in the markets. Do you share that same view?
Well, yes, investor sentiment is majorly driven by confidence, so no investor likes to put his money where there's no certainty, and which speaks to why we've experienced that so much drag, in market activity. By the way, before market did that 10 days of consecutive gains, the level of index at 28,000, we've not recorded that index in the last 8 months. Perhaps the last time we saw that kind of bullish trend was when a policy was introduced, first in May 2016 and subsequently in June. Those were the periods we had liberalization of the downstream oil and gas and the announcement of a flexible foreign exchange market. So what we saw now, we have spoken to a couple of traders, those who are close to the market, even Afrinvest brokerage team, and they have told us that, some of the foreign investors who have left this market in 2014, are beginning to come back. And the major reason they are citing is the fact that we've seen some market-friendly foreign exchange markets. There's a window, which you call the investors and exporters window, which is which investors find comfortable, because before now we've seen some artificial stability in rates, but the I&E window is deemed to be market friendly, and investors can relate with that. However, like you mentioned, confidence is still an issue. We are at a phase where investors are still very cautious. Even now, they are not in fully. They are still trying to test the market. Now,
talking about the foreign exchange market, we've seen the continuous intervention by the central bank, in that market. And yesterday we saw the inflation rate released by the Nigerian Bureau of Statistics. So, how are you confident that this CBN's intervention is it really reflecting on the general economy? Looking at the numbers NBS came out with yesterday.
Well, there are two different things. So the recent intervention by the central bank started sometime around February, right? And before you see the transmission between, because we all agreed that the hike, the inflationary pressures that we've seen in the system is largely linked to our FX policy, because if you check even the inflation number that has been released now, we talk about food inflation, which seems to be rising. By the way, this rise started since November 2014, when the currency was first devalued. And, between then and now, we are still trying to find, a comfortable foreign exchange policy. As we speak, we don't have one yet. So what we're still having is, a lot of management. So, but to the point is that, yes, the lag between the interventions and how it begins to transmit within the economy, will not be within 1 month or 2 months. And the inflation figure we are seeing now is for April, and a lot of base effects are playing in, of course, even though we notice that there's still pressure on a month-on-month basis, but going forward, we believe that what the central bank is doing now is apt. They should continue, but we should unify the rates.
All right. Thank you very much, Robert, for your time. Robert Omotunde, Senior Investment Analyst with Afrinvest. We'll take a quick break. When we return, we'll look at the Nigerian energy markets.